Hello, entrepreneurs. Joe DeCharis, CPA, coming to you live from downtown Flushing, New York, once again for another amazing episode of How to Win at Business. And if you're watching live, please give me a hashtag live. If you're watching the replay, give me a hashtag replay, just because. And if you have any questions, post them in the chat box, and I always respond. And tonight, another one of my favorite topics on stealth tax strategies. We're going to be talking about, different ways to pay yourself to minimize your taxes. But before I get into that, if you're watching live, it's what's today, February 22nd. So if you haven't filed your tax returns yet, and you're watching this, be careful, because you need to know exactly what your stimulus checks were. Okay, there's a big warning sign on the IRS's site, and my software company sent me an email saying that if you file, so if you go to an accountant, you have to tell them the right amount. If you do it yourself, you have to enter the right amount. If you're doing it electronically, I hope you're not doing it by paper. But if you don't put the right amount in there, it may delay your refund. And not only that, if it delays your refund, that when the numbers don't match, when something gets kicked out of the machine, out of the computer, and somebody has to look at it, your chances of being audited go up tenfold. Okay, not all the audits are done, chosen randomly. When human beings have to get involved and they look at something and it doesn't make sense to them, it can go up the ladder, all the way to criminal investigations. And I know this because I know people that have worked at the IRS, and people do some really stupid things, but that's another story. So that's the latest on the stimulus stuff. The IRS actually stated that they have mailed or delivered electronically all of the stimulus checks. Okay, so just think about this. They have either mailed a check or tried to deposit it electronically to everyone. So if you haven't gotten it yet, there's a problem. If they mailed you a check, there might be a problem with the post office. Now they've also done some crazy things, like they put my stimulus check in a bank account I never told them about. They mailed my mom her first stimulus check. She moved, she closed the bank account, and the IRS somehow wired the money into a closed account. Well, it wasn't actually closed. It was also a savings account, and the bank saw it come in. I have another friend who did the electronic. The first payment was done electronically because that's how it was done. Well, the second one went out by check. So there's no rhyme or reason to what's going on there, but I don't know what's going to happen. Let's say they mailed a check. So in their system, they're saying they paid you. And when you do your return, you're going to claim that you didn't get it because now you're supposed to get it on your tax return. Well, guess what's going to happen? There's going to be millions of tax notices next year saying that your records don't agree with the IRS's records. Well, that's because the post office screwed up. The post office is holding all the checks because they're also holding all the vaccines. This is nuts, folks. But let's get to paying yourself, because this is something that people just they don't realize, and I believe that it's because it's not being said properly, basically by me. And here's the story in a nutshell. When you go into business and you're a sole proprietor, you are at a great disadvantage by design right off the bat for a number of reasons. And one of them is because you have no control over paying yourself. Whatever you make, you're paying taxes on it. You don't get to give yourself a W-2, although I have seen people do that, which doesn't make any sense. You can't be a sole proprietor and an employee of your sole proprietorship. I mean, the payroll companies will process the payroll and the IRS will process. I mean, but all you're doing is you're costing yourself more money. You're paying more in payroll taxes, but that's another story. So when it comes down to it, whether you're giving yourself a W-2 out of your sole proprietorship, or if you're a sole proprietor, you have no leeway in how you get paid, how much you have to claim as taxes. The only leeway you have is you can do some retirement plans. Okay, you can do that. There are retirement plans set up for that sole proprietors can take advantage of. But other than that, there's really not that much leeway a sole proprietor can take advantage of. Now, a corporation, an S-corp, has many advantages because you get to choose how you pay yourself. For instance, the dividend distributions, when you take profits, not salary, but just dividend distributions from your corporation, they're not subject to self-employment tax. Now, if you're making a good sized profit, you need to take a salary. That's the law. But the law is that you take a reasonable salary. And there's a whole nother issue on what's reasonable. But the bottom line is that you have leeway. So you could take a salary, you can manipulate your salary so that you get to, manage how much you're actually paying into Social Security. I see people paying, they're still paying. Even if they're collecting, they can't collect anymore. They're still paying because they're still working. They're not going to collect any. You're getting no benefit, no more benefit, but you're still paying in. Okay. You can reimburse yourself for business use property that was personal use. For instance, your home, your apartment, you can't write that off as a business expense. But if you're a corporation, you can do it stealthily. It doesn't show up on your tax return. You can write it off on a sole proprietorship, but there's all kinds of red flags on there. So that's not really another way to pay yourself. Actually, it is, because if you're a corporation, you could pay yourself and not raise any red flags. Okay. You could, there's a lot of other things you can do in paying yourself. Non-taxable fringe benefits, okay, education expenses, any kind of credits or tax write-offs that an employer can get when they have an employee is another way to pay yourself stealthily without paying taxes on it. For instance, if you have an employee, you could give them tax-free education credits. Okay, so when education would not be a tax write-off for them, but it would be for the employer. So now you're getting a tax-free fringe benefit from your own corporation. So I could go on, folks, but the bottom line is that that is a legitimate way to reduce your taxes just in the way that you pay yourself. That's my story. I'm sticking with it. God bless. Over and out. Thank you. And